best Flexi Cap mutual fund. Hello, investors. Welcome to today's video. If you are someone who wants to make smarter investment choices, you are in the right place. Today, we are going to dive into one of my absolute favorite fund categories, the Flexi Cap category. This category has consistently been a fan favorite and one that always gets the most attention when we reveal a fund from it. But this time, we've got a challenge ahead of us. We have combined Flexi Cap, MultiCap, Contra funds, value funds, and focused funds into one big selection process. And guess what? We had to choose just one fund from over 113 options. Sounds tough, right? But I'm here to walk you through how we selected the best of the best. So, let me give you a bit of background. Our task was to pick a fund that could perform across multiple categories. And when you have 113 funds to choose from, making a decision becomes pretty tricky. The process started by applying strict filters. We needed a fund with at least 10 years of performance history. Why? Because we wanted to see how the fund has performed through different market cycles. You know, performance isn't just about today, it's about consistency over the long run. Once we applied this filter, we were left with 50 funds. Next, we applied rolling returns, which shows a fund's performance in different seasons and over varying time periods. We compared the funds against their benchmarks, and this gave us the consistency we were looking for. After applying this filter, we narrowed it down to just 35 funds. It's not just about performance, but how much you pay for it. Lower expense ratios give you more of your returns. So, we compared the expense ratios of the 35 funds to their category average. This filter further narrowed our selection to 18 funds. But we didn't stop there. We also considered the asset management company's reputation, the fund manager's experience, and turnover ratio. These factors helped us identify 4 top contenders. Now, let's talk about why these categories matter and why we combined them. First, Flexi Cap. This category is unique because it gives the fund manager the freedom to invest in any market cap, large cap, mid cap, or small cap. The skill of the fund manager determines the returns here, which is why there is no room for underperformance. There are no restrictions. The manager can invest based on what they believe is the best opportunity. And with great flexibility comes great responsibility. This is the pinnacle of active management, and the fund manager's skill makes or breaks it. Now, multi-cap funds. While similar to Flexi Cap, the difference is that there are some restrictions. The fund must invest across large, mid, and small cap stocks. The key difference is that in Flexi Cap, the fund manager has complete freedom to pick the best opportunities. In MultiCap, they must allocate a certain amount to each category. This means that while there's some freedom, it's a bit more restricted. Contra funds take a completely different approach. They look for stocks or sectors that the market is currently ignoring or undervaluing. These funds are riskier but can offer huge potential if the market turns in their favor. They're about finding stocks that are out of favor but have long-term potential. Next, we have value funds. These funds focus on buying stocks that are undervalued based on traditional valuation metrics like the price to earnings, PE, ratio, price to book, PB, ratio, and others. They aim to find good businesses at reasonable prices, offering a better chance for returns over the long term. And lastly, focused funds. These funds are concentrated, with a limited number of stocks, often 30 or fewer. They are more concentrated in terms of stock selection and are often better for long-term investors who are willing to take on higher risk in exchange for potentially higher returns. So, when we combined all 5 categories, we were looking for the best traits of each to identify a winner. After applying all these filters, we had 4 strong contenders. These funds came from top asset management companies with a stellar track record, strong rolling returns, and reasonable expense ratios. But here's the tricky part: choosing the winner wasn't easy. We had to ask ourselves, what makes an ideal fund? We believe an ideal fund should have 3 key elements. 1. Flexibility so that the fund manager can make the best decisions. 2. Value-based to ensure that we aren't overpaying for stocks. 3. Focus the limited number of stocks to avoid over-diversification and better manage risk. After considering all these factors, we realized that we were looking for a fund that was a perfect blend of Flexi Cap, focused, and value. This brings us to the winner, Parag Flexi Cap Fund. This fund has consistently outperformed the market with a solid track record. It follows a value-based approach, focusing on high-quality businesses at reasonable valuations. And it's a Flexi Cap fund, which means the manager has the freedom to allocate across market caps based on opportunities. Alright, so far we've covered the selection process, the fund categories, and why we are focused on these specific funds. But there's one important principle in investing that I want to emphasize before we wrap up: long-term investing and risk management. When it comes to mutual funds, especially equity funds like the ones we've discussed, patience is key. These funds may experience fluctuations in the short term, but it's the long-term performance that truly matters. Whether you are investing for retirement or for other financial goals, the power of compounding and a long-term outlook can work wonders for you. Now, while investing for the long term is crucial, it's also important to remember risk management. Even the best performing funds can experience volatility, especially in uncertain market conditions. This is why diversifying your portfolio, regularly reviewing your investments, and setting clear goals are vital steps in managing your risk. One way to mitigate risk is by spreading your investments across different fund categories, which is exactly what we've done with this selection. For instance, a MultiCap fund gives you exposure to both large cap and small cap stocks, offering growth potential while reducing the risk associated with investing in just one market segment. And don't forget, the expense ratio and exit load of a fund also play a huge role in how your returns play out over time. Lower fees mean more of your money stays invested and working for you. Why Parag Flexi Cap Fund, you ask? This fund has been around for years, and the team has always stayed true to their principles. Unlike many other funds, they don't focus on gathering assets at any cost. They've built a reputation for bringing distinct, high-quality funds to the market with no overlap and a clear value-based approach. Now, I know the past 2 years haven't been the best performance-wise, but remember, their investment philosophy is centered around value. And when markets become expensive, this fund prefers holding cash and waiting for the right opportunities, which is a cautious and smart approach. So, there you have it. After considering all the factors and going through a rigorous selection process, the Parag Flexi Cap Fund is our top choice. But remember, investing is personal, and it's always important to do your own research and consult a financial advisor before making any decisions.